Mr. Investor Lot, welcome back to the channel. Today let's talk about energy. So the oil prices are currently soaring. WTI is hit over $76 per barrel, Brent crude is hit over $80 per barrel, and gas prices are also soaring too. There's currently an energy crisis in Europe and it's creating the perfect conditions, the perfect storm for oil companies. Some analysts believe we could be seeing $90 a barrel per year end. Other analysts are believing we could even hit $100 per barrel. So for some oil companies this could be crazy lucrative. They could be just printing that cash dollar baby. This company that I'm currently invested in, which is Occidental Petroleum, went up 7.4% yesterday, and in pre-market it's up 1.69%. I hope you find this video valuable and entertaining. Please remember, it's not financial advice, it's only for entertainment. And if you're able to support the channel and want to send me a donation, I have a PayPal link in my description box below. Or if you'd like to join the channel, you can click the join button above my head. But if you're unable to, just you clicking like and subscribe is enough for me. Thank you so much for loving the channel. Thank you for appreciating the content, and I hope you find this valuable and entertaining. So Occidental Petroleum was up 7.4% yesterday, Exxon 3% and another 1% in pre-market. All the big boys seem to be enjoying this current oil price, as Chevron is also up 2.3%. So what could be one of the factors that is currently affecting the oil price, the gas price, and even the price of coal? Well, because of this European energy crisis that we're currently facing, where there's a lack of natural gas supply, this is currently beginning to influence global oil and coal markets. So as you guys may know, WTI price hit $76 per barrel, Brent crude hit $80 per barrel, and coal is also high in demand and it's hit a 13-year high. One of the major issues that the US was kind of predicting was Russia limiting natural gas exports. Bloomberg was reporting on the 20th of September that the cap on additional Russian supplies is leaving Europe starved for the fuel it needs to boost buffer inventories before this winter. Reuters stated half an hour ago that the Russian gas supply via the Yamal Europe pipeline is falling by more than half on Tuesday. Another thing that's currently affecting the local prices here in the UK. Remember during the pandemic when we had all this consumer behavior where they were buying as much toilet roll as possible? Now the same thing is happening in the UK because people are worried that we're going to run out of petrol, and currently up to 90% of the UK's petrol pumps are dry, and it's because of this consumer behavior of panic buying. The local energy crisis here in the UK is stemming from Brexit apparently. So the Road Haulage Association has said that 20,000 European lorry drivers left their jobs in the UK because of Brexit. So we don't have enough of these HGV drivers to deliver fuel. This being reported on the news and people thinking, oh no, we're going to run out of petrol, has led to panic buying. So there's a lot of stations that are currently out of service because they don't have enough fuel. There are long queues in petrol stations all across London. It's being reported as well that the demand for petrol has soared by 500%. And as you can see by this picture here, people are filling up as much as they can. They're literally stocking up and storing petrol. And apparently some thieves are even targeting parked cars, drilling holes into tanks, and they're literally spilling all this petrol on the floor, trying to get as much petrol as possible from their neighbor. Anyways, enough about our panic buying. Goldman Sachs has reported that they see Brent crude hitting $90 by the end of year, and they stated that Hurricane Ida has also offset the ramp up in OPEC's production since July. They believe that Brent oil prices have reached new highs and that they'll continue to rally. As of the 13th of August, Goldman Sachs filed the 13F form and they said they had 2.4 million shares of Occidental Petroleum. Goldman Sachs analysts are also bullish on Occidental because they're saying currently at favorable commodity prices, they see potential for shares to improve through balance sheet improvement as they pay off their debt, and over time with success in Oxy's low carbon ventures business. So carbon capture is actually going to be a big business in the future, is what lots of the oil majors are betting on. So what else could happen for oil, and what else could happen here in the UK? Well, they're predicting there's going to be a long, harsh, cold winter here in the UK, and they believe that gas prices are going to soar, and it's also going to put a heavy reliance on oil. There's even gas producers such as Serica promising significant returns to shareholders thanks to the record prices of gas. And these record prices of gas have caused loads of bankruptcies here in the UK as well from energy companies. Apparently 1.9 million UK homes lose supplier after 2 more gas firms go bust, but there's so many more that went bust. It says something like 9 suppliers have been lost this year. My gas supplier actually went bust recently, and one of the papers here in the UK has put a list together of all of the suppliers that have collapsed, and in 2021 there's been quite a few over here, and I think there may be some more because there's currently some more that are at risk of going into administration. I think this is because gas providers have given you, a kind of contract. So say if they give you a yearly contract and they're like, you know what, this is how much your gas and electricity is going to cost you, and then all of a sudden this boom in gas prices means that they're actually operating at a loss. So they've given fixed contracts to their customers and the price of natural gas has just continued to climb. So if we take a look at this perfect storm, what could we we see? Could we see $100 per barrel for oil? Bank of America believes that a cold, harsh winter could bring forward their oil target of $100. So I believe they're stating that mid-2022, if the winter is colder than usual, potentially could drive a surge in demand and widen the supply deficit. And also, what is going to happen if we see higher oil prices? Are we going to see increased food prices? Apparently, we may see this because, energy costs account for a significant share of food production costs. So increases in energy prices can reduce the profits of farmers, food processors and retailers and raise consumer food prices. Talking about farmers, there are cabbage pickers here in the UK that have been offered £62,000 salaries by firms because there's a UK staff shortage. This is caused by Brexit apparently. And if we convert over £62,000 for our American audience, these guys could be paid $84,486 for picking cabbages here in the UK. It's up to £30 per hour, but I think that's if you're operating at, optimal energy levels, running around making sure you get all of those cabbages. And it says up to here £30 per hour, so it's probably a lot less. It's just saying, at maximal work rate, you might be able to make this. So what I want to know is, what are these oil companies, these energy companies going to be making? How are they going to perform in this kind of market? Occidental Petroleum, I'm up by a juicy amount. I'm up by nearly like 40%, I think, at the moment. I know some people who are up 200%. Shout out Bester Investor. This guy is also known as Mr. Oxy. We love him very much. He's over at Millionaires Club. So if you want any kind of information on the energy markets and Occidental Petroleum, this guy is Mr. Oxy. In terms of the analyst predictions and the forecast, some analysts are saying, there's going to be a high of $39. Some believe there's an average of $33.45, giving it a potential upside of 10.8% and a low of $24 per share. If we look at a chart mill, so we look at the analysis over here, it states that there's a 73% buy consensus. They're stating that analysts have a mean price target of $35.09, which is 16.2% upside potential. Oxy was actually analyzed by 19 analysts, and on the high side, one of them has said $52.50 per share here, indicating a 73.9% upside in the next 12 months. So according to chart mills, they're saying that 8 analysts are indicating strong buy, 9 analysts are indicating holds, and 2 analysts are saying strong sell. So I want to know, where do you think Occidental Petroleum is going to end up in the next 12 months? Are we going to be seeing $100 barrel per oil soon? And are we going to see Occidental Petroleum touching maybe $40? I just want to see Oxy pay down their debt. I can wait for dividends. I can wait years for dividends. If they manage to pay down that debt, we're going to see some capital price appreciation, I believe. And I just wonder when they're going to start paying back some dividends. Are they going to do it, in a year's time, 2 years time? And I want to make another video on the global carbon market, because I believe we're one of the industry leaders and we're actually working on one of the biggest carbon capture facilities. And I was going through investor presentations from some of the competitors of Occidental Petroleum, and I was seeing who is exploring carbon capture and what they value the kind of industry at. And some value it at billions, some value it at 2 trillion. So let me know your thoughts and feelings on Occidental Petroleum. Please remember, none of this is financial advice, it's for entertainment only. And if you enjoy videos like this, please subscribe to the channel. And if you want to send me any donations, I really appreciate you guys. Thank you so much. There's a PayPal link in my description box below. Overall, I want to thank you so much for the love and support you've given me. And I really appreciate you liking and subscribing, and also dropping me some comments. I'd love to read your comments and see what are your kind of analysis and predictions on the oil market. Mr. Investor, over and out, baby.